Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're trying to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We don't have any real economic data coming out today. For the most part, everything is not really going to be much of a market mover here in the United States. So we'll move on with that. A couple of things going on right now. We got the NASDAQ pushing lower. Oil's still pushing lower. It kind of looked like it was starting to have a bit of a separation yesterday. Oil was down. The overall equities were up. And what has happened recently is that they've been moving lockstep following the crude oil move. If the crude oil went down, the overall equities went down. Yesterday we had a bit of a separation. Today it looks like it's back in line again. Crude oil's down, and as are the rest of the equity indices. As you can see here from the E-mini NASDAQ chart, we're down about 55 points. Tested yesterday's low, broke through it for a bit, but now are just treading water above yesterday's low and very close to the value area low, as you can see here on the market profile with this chart. So, I talked about it coming up and testing this point of control on the overall chart. We'll have to see if that continues. If we get much below this, the bears are going to be winning and continuing that bear market trend. Same picture here in the E-mini S&Ps. As you can see, yesterday we rallied up, created a bit of a hangman dojo, but now are starting to sell off and are below yesterday's range. So bears are looking like they are in control here. So market moving lower for the most part. Yesterday I talked about how the overall market was going to want to print the overnight highs, and it did right towards the end of the day, and then we kind of sold off. Since then we have done nothing but really just have a pretty orderly sell-off. We're having the big waves like that, which means the bulls are in control. Yesterday we didn't have a whole lot of volume in that rally, which kind of leads a lot of people to believe that there wasn't a lot of conviction to that rally. The bulls really weren't taking part in it. It was just more of the bears kind of letting go and the market just drifting higher. So that being said, was a little bit dicey as to what was going to happen today with that low volume yesterday, and that usually means that there's going to be a bit of a sell-off. As you can see here in the E-mini S&Ps down about 26 points. Now, a couple of trades that I've done, and I tweeted this out on Twitter. I threw a couple of earnings trades on late in the day, since I do these market commentaries early on in the morning, right after I usually put on a few trades. I didn't have a chance to tell you guys about the earnings trades that I was doing, so I tweeted those out on Twitter. So if you don't follow me on Twitter, you can do that, because that's usually where I'll tweet my late day trades out. And in Google seemingly going to be taking over the world here, and I had a feeling Google was going to beat and really rally, so I just sold some puts in there, and I did the February with 4 days to go yesterday. Sold the 650 puts in there for 85 cents and covered them back for 5 cents this morning. So I was looking at it like it's probably not going to go down below this area, especially because they just have a tendency to really come out and beat earnings. They're just Google and Amazon seem to be ready to take over the world. But moving forward on to ExxonMobil. ExxonMobil I was pretty bearish on, as the overall energy markets are getting beat up. These companies are really getting beat up as well. They're really struggling to produce oil in the shale oil fields. Are actually rig counts are down. So unless something happens over in the Middle East where they kind of turn the spigot off on those oil producing areas, the price of oil seems like it's pretty well in a downward spiral. So, having said that, that's going to cut into the margins of ExxonMobil. So I went into this as a short and sold the February 1 weeklies and sold the 78.5 calls for 33 cents. Bought them back this morning for 6 cents. I probably could have waited a little bit longer and covered them for a little bit better. I think it was like the low I saw was about 3 cents on those, but you're counting pennies. So in front of a steamroller, because they did come out and beat earnings actually just slightly. So I got out of that, as I do with all of my earnings trades, right on the open. I didn't put on any new trades as of right now for longer durations. For one, we have so many earnings coming out right now. It's very difficult to find a clean stock that doesn't have earnings involved in it going forward. And the ones that have just had earnings have had this volatility crush come out of it. And anytime you get that crush happen, it's very difficult to get any premium going forward unless we see some other type of event that creates a little bit of volatility within those stocks. So, and we're going to be doing a full-on webinar series on volatility crush and the best strategies to use wrapped around those volatility crush type scenarios, and how to make money in that. So keep your eye out for that. You can go to protraderstrategies.com and sign up for that. Another thing is, I haven't put on a lot of trades because I'm very close to my margin max on this, so I'm trying to save some margin for these different earnings trades, unless I can get Tesla to like really crash or the stock market kind of fall out of bed. A lot of my margins tied up in those different underlyings. So right now I'm pretty tight on my margin, so I want to save some of that margin for these types of trades, because lately they seem to be the bread and butter, and they're just a lot of great fun. I love watching that volatility crush happen right after the event. So this Friday we're going to be doing a webinar on synthetic long calls. Last week we did it on synthetic short stock. This week we're doing it on synthetic long stock and how to create a stock position through the use of options. Now, why would you do that? Well, it uses about 50% less margin. So if you're a small trader, a beginning trader, and don't have a lot of cash in that account to create an overall large portfolio, you can create a pretty nice portfolio with a smaller account using 50% less margin. You can buy a couple of hundred stocks throughout the different sectors, and then play it that way. Or you can take a couple of your favorite stocks, create a synthetic long stock position, and then we'll show you how to lower your cost basis on that through adding different types of option strategies around that core portfolio. All right, so that's all I got for you guys today. Go to protraderstrategies.com, check out that webinar for Friday, and keep your eyes out for the upcoming webinar or the series on volatility crush. If you can't take that, take it easy.